Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, have Vinny Motiwala. Very good afternoon to you, Vinny. And indeed, it's turning out to be a good afternoon given the fact that we've actually recovered all of those losses on an intraday basis. We are nifty that it was that touched positive territory a short while ago. Sensex is in the positive territory, trading with a positive bias as of now. Remember that we had opened for trading session approximately 0.5% lower, but now we have actually recovered from those levels. Talking about what Nifty Bank is doing, that one also still in the negative territory. 0.4% downtick coming in for Nifty Bank, but yes, good recovery coming on the Nifty Bank as well. Talking about the broader markets, mid cap has now inched into the green territory, while small cap has only built on to gains. Remember, small cap index has been outperforming the benchmark indices from the word go, so now small cap index is seeing gains of about 0.5% at the day's highest point as we speak. Talking about the sectoral indices, then is the realty index that has surpassed the IT index to become the top sectoral gainer in trade today. IT index also is seeing good strength in trade. Along with the IT index, you also have media and pharma that are in the positive territory, while on the negative territory is the metal index that continues to be under pressure. If you look at the metal index, 0.9% downtick coming in for the metal index, and the one of the top sectoral losers in IT index or rather metal index would be Hindustan Copper. That one is languishing in trade, 6% downtick on back of earnings. But that's the way how the markets are looking like. Good and steady set of uptick or recovery coming in for the benchmark indices today, Vinny.
Absolutely, keeping an eye out on the markets, where is the recovery that was really going forward in the next couple of hours as well. But on that note, let's bring on board our technical analyst for today. We have Sumeet Mulchhandani joining with us from the research team. We have Lisa as well as Ankita joining with us as well. A very good afternoon to all three of you all. Good afternoon to you as well, Cheryl. And the first stock I'm going to talk about is the last stock that you spoke about, that is Hindustan Copper. That one is surely in focus, and that is what is leading and dragging down the metal index as well, the top loser over there. And the main reason is because they reported a weak set of numbers in a quarter one. When you look at it in terms of the profits of the company, that has seen a sharp decline this time around as well, and that's a decline of around 17.5% in terms of the profits of the company. What they posted this time, the net profit came in at only 47 crores this time, and that is mainly due to the higher expenses. Now the expenses of the company also rose to 322 crores versus a 280 crores. So an increase in expenses is something that is overall impacting the profitability of the company. Other than that, when you look at it in terms of the revenues of the company, we're seeing a mild growth of 7% this time, while the margins of the company also have seen a contraction coming in, a sharp contraction in the margins of the company, more than 1,000 basis point contraction in terms of the EBITDA margin. 25.1% is what the EBITDA margin came in at versus 36.3% last year. So clear pressure coming in on the bottom line as well as the operating performance of the company. Higher expenses is one of the factors that is surely impacting Hindustan Copper, and that is why it's trading with cuts of almost 6% as of now.
All right, let's move on. Let's talk about the oil and gas sector, especially ONGC, Oil India, MRPL. These counters are in focus in today's trading session, and this because government has gone ahead and hiked the windfall tax on petroleum crude to about 7,100 rupees per ton, and this against 4,250 rupees per ton earlier. So this is effective August 15th. Government, however, has left the windfall tax on petrol unchanged at zero. So on back of that, we have Chennai Petro that actually saw the biggest decline on an intraday basis. If you look at Chennai Petro, it fell as much as 3.8%. That was and fell to the lowest level since May 23rd. You had Oil India, ONGC as well as MRPL. All three of them hit a 1 week low in today's trading session. As you can see on your screen right now, ONGC, Oil India have actually recovered from the day's lowest point. However, MRPL is still in the negative territory, almost a 2% decline coming in for that particular counter.
Okay, let's move on and talk about Varun Beverages then. And Sumit, this one on the charts, interesting that you picked out this one. Summers wasn't that good, but could we expect a good run up that we're seeing in Varun Beverages in the last 6 months to continue going forward as well?
Hi, good afternoon to all. So yes, previously also 2 to 3 times we have discussed this stock, and this is a portfolio stock. So every time it is taking the support of the good moving averages and giving us the good bounce again and again. And this time it has again touched today the lifetime high of 900 something. So we are expecting more ahead. One can still accumulate in the dips, and one can take the new position in the current market price. We are expecting the levels of 947 and 994 ahead. And if anybody is holding, can keep a small moving average, 50 moving average as a stop loss, that is around 815. So accumulate the stock.
All right, accumulate Varun Beverages is the word coming in from Sumit. But Lisa, let's talk about Indigo, and that particular counter is one of the newsmakers of the day. And what's the news surrounding Indigo?
Yes, Indigo is in focus on the back of a block deal. The Gangwal family, they reportedly sold around 4% stake in the company, and they were holding around 29% stake. The indicative price that came to around 2,400 per share, which is a 5.8% discount to the Monday's close. And the overall value of the block deal, that is at around 3,730 crore. Well, Nuvama, on the back of this, they said that with more shares getting freed up from the promoters' belt, the weightage in the MSCI as well as FTSE index, that is likely to change. And they said that the additional floating shares that will be added in the next few days, and the inclusion is expected to generate a passive flow of approximately $15 million. So these additional shares, floating shares, that will be during the November review. So that is why we can see Indigo, it's trending lower today on the back of this block deal, down around 3% as we speak.
Okay, that's on the back of news flow and block deals that we're seeing coming in. But Sumit, on the charts, what's the view on Indigo? You know, we had seen it run up overall, when you look at it on a 6-month basis, yes, it's giving good returns. But last 1 month, we've surely started seeing a correction coming in, 7-8% decline in the last 1 month. Is it a good time to enter the stock, or maybe someone should start booking the profits now?
For a short-term trader, we would just advise to book some profit. As you can see, this is a double bottom on the 8th of August. The same low was there, today's low, 2430. So if 2430 is broken, it can shade a few percentage also, that is around 5%. And we are expecting 2300 levels to come. But if any long-term player is, then this is a chance to buy in the dips and accumulate the stock near the 2300. That is a moving average 100. So we are expecting, but as it is right now the current leader and almost have the market share of around 50 to 60% in airlines. So for the longer term, we would accumulate this stock near the 2300 levels for the new high of 3000.
All right, that is Indigo for you. But Ankita and not Vinny, talk about ITC. Why is this one in focus in today's trading session? I think Vinny has had her share of talking about ITC over the last 1 week for sure. So let's give a break. Ankita, ITC, why is this one in focus?
Cheryl, ITC is in focus on the back of three things. Firstly, the earnings and a note that came out in the morning by Morgan Stanley, and of course the news on demerger. But first up, let's look at the earnings that came out for Q1. They saw a profit PAT jump of 17% on a year-on-year basis, and they also saw their margins grow by 39% versus 32% on a year-on-year basis, and the EBITDA also came in at 6,251 crores, which was up 10% on a year-on-year basis. And Morgan Stanley also came out on a note on ITC today, and according to them, they have beaten on all accounts another good quarter of growth. Earnings augur well for the continued stock outperformance. They also feel that all business segments have performed better than expected on EBIT growth. Indicative timeline, of course, for the listing of ITC hotels is around 15 months, that is by November 2024. And on the back of that, they remain overweight on the counter, and they have also increased the target price to 493 rupees from 474 rupees per share. Now, on Monday also, ITC approved the scheme of arrangement involving the demerger of its hotel business into separate listed entity subsidiary. And under the demerger plan, the shareholders of ITC will get 1 share in demerged hotels business for every 10 shares held in the parent company. And on the back of that, ITC stock will remain in focus today.
Keeping an eye out on ITC, but let's move on and talk about Tejas Networks. Why is Tejas Networks in focus? Why? Because they've received a purchase order of around 7,500 crores approximately from TCS. Now, this order is mainly related to towards supply, support and annual maintenance services of the radio access network equipment for BSNL's pan-India 4G and 5G networks for approximately 1 lakh sites is what is highlighted. And today, after that, we saw the stock actually went up as much as 6%. As of now, also still trading with gains of around 4.5%. But Tejas Networks in focus on the back of this purchase order that they've received of around 7,500 crores from TCS.
All right, so that is Tejas Networks that is in focus in today's trading session. Smart up move is what the stock is logging in. But Sumit, let's talk about Jubilant Pharma. And how are the charts for this one looking like to you?
The stock has given the breakout after a long consolidation, almost from the May 22. It has given the good breakout 3 sessions prior, and today we might get some follow-up. So we are just waiting, and it is showing the good technical breakout also. So one can accumulate the stock till the levels of 420, and with the stop loss of 395. We are expecting 525 and 580 levels to come. Also, there is a trend line breakout in the weekly also. The stock has fallen from the levels of almost 900 till the levels of 400. So we are expecting a good U-shaped recovery from here.
All right, the next stock that we are talking about is shipbuilders, and that is Cochin Shipyard as well as Mazagon Dock, and primarily Mazagon Dock that is in focus in today's trading session. You have agencies that have reported source-based information that the government is evaluating competing bids to build 6 submarines in the country in a potential to get around it's a potential of around $4.8 billion deal. So the names that have come up in these counters in this particular bid, one is ThyssenKrupp, and what the sources are saying that ThyssenKrupp has actually planned to bid along with Mazagon Dock for the submarine for the submarine order. So on back of that, you have Mazagon Dock that is in focus in today's trading session, and also you have another company known as Navantia, which is a Spain company, and that has partnered with L&T and submitted a bid for the submarine. So on back of this particular development, that the fact that the government is looking out for partners or for builders for the submarine orders, you have Cochin Shipyard also that is moving on back of this positive news flow. Mazagon Dock is anyways moving on the fact that ThyssenKrupp has actually is planning to submit a bid in collaboration with the company. But you also have Cochin Shipyard that is soaring in trade on back of this news, 16% uptick for that one. Also Garden Reach also is buzzing, but Garden Reach is also buzzing because it's reported a strong set of earnings. So a lot of confluence of news that is acting positively for these companies.
Absolutely, keeping an eye out on that one. But let's move on and talk about Timken India on the charts. And Sumeet, when you look at it, we have seen a bit of a correction coming in the stock price as well. And in the last 3-4 months, it's remained in that range of 3,000 to 3,500. Again, that fall coming in the recent times as well. So now, what is your view on the stock? What should we expect now from here on?
6 months in the month of April and March, it has given the good return. But afterwards, after the consolidation today, it is breaking the supports. So we would just advise to exit here if any investor is there, because we are it shows the more weakness. Today it is giving the closing below the 200 moving average, also below the 100 moving average. So it shows more weakness, and we are expecting more downside till the levels of 2900. Current market price is 3150. So better to exit here.
Moving on, let's talk about VIP Industries then, Lisa, and why is this one in focus today?
So it's in focus on the back of the MD resigning. Mr. Anindya Datta, who's the managing director of VIP Industry, he has tendered his resignation with effect from 14th August. And in his place, Miss Neetu Kashi Ramka will take over as the MD and CFO of the company. So Mr. Datta had joined VIP way back in Feb 2021, and he had steered the company after the turbulent COVID period. His tenure had been a mixed bag, and during this time market share loss was also that remained a key concern. Even compared to its peer Safari Industries, VIP Industry has underperformed in terms of earnings also. So on the back of this management rejig, VIP Industries is in focus today.
Okay, that's the news flow that we have on VIP Industries. But VIP Industries on the chart, Sumit, what is the view now coming in for VIP Industries? What is the target that you're maintaining for this one? Last 6 months, nothing great in terms of a return. When I'm looking at a 6-month chart, it's just 2.5%. So could we expect this run up now to continue?
Yes, 4 to 5 session prior, it has given a good trend line breakout. It has given a triangle breakout also, and trying to sustain above the 200 moving average. So technically looks good, and one can accumulate in the current market price and also in dips. Keep a stop loss of 620 here. Current market price is 680. We are expecting it to the previous high of around 770. If on the weekly chart, if it is giving the 770 closing, then we are expecting ahead till the levels of 900 also. So looks good for the next 3 to 6 months.
All right, that is VIP Industries for you. For Ankita, moving on, let's talk about Jupiter Wagons as well as Titagarh Wagons. Why are these counters in focus?
Cheryl, it is on the back of the fact that the government is reportedly exploring a production-linked incentive or a PLI program for train component makers to reduce the import dependence and attract more foreign manufacturers. And the contours of the PLI scheme will be worked out with the help of a consultancy firm. And on the back of that, we can see Jupiter Wagons, which is up almost 5% in trade, and Titagarh Wagons also, which is up more than 2% in trade, running on the back of this news.
Okay, keeping an eye out on both these stocks buzzing in trade today on the back of the news flow. But let's move on, talk about solar industries and putting spotlight on that one on the charts. And Sumit, when you look at it, last 1 month, a good up move that we've started seeing coming in solar industries, 11 to 12% in the last 1 month. Interesting move there. Now, what should we be expecting? 15% actually when you're looking at it. So now, what are the charts indicating now for solar industries?
On the longer time frame, if somebody wants to accumulate, we are expecting a good move ahead. If you draw a perfect trend line, it has took a support and also it has given a consolidation breakout also. So we are expecting good move ahead, and targets can be 4,800 and 5,200. Current market price is 4,200.
Okay, let's move on and then talk about Uflex. Why is Uflex in focus? Is last few of those earnings which are still left, and I'm going to be taking one of them today. Uflex reported its numbers, not that great of set of numbers coming in, and clearly we are seeing that pressure coming in on the stock price as well. We're seeing that the company reported a loss this time of around 416 crores versus a profit last year of 374 crores. Other than that, when you look at it, this was mainly due to there was a one-off exceptional expense which was there of 381 crores, which led to this big loss. But even after that adjustment, the company is still reporting a loss, right? So because of that, we're seeing clear pressure that has come in on the stock price as well. The revenues also have seen a decline of 19% coming in on a year-on-year basis at 3,220 crore rupees. Operating margins contracted by 900 basis points, so coming in only at 9%. So clearly pressure is coming in on Uflex today. Nothing interesting in terms of the stock move as well, and nothing interesting in terms of numbers, down 6% in trade.
All right, that's Uflex for you, and that's the earnings, and that's the reason why it's reacting today. But Sumit, on the charts, do you think such a performance will continue for Uflex going ahead? Because 6 months also, they've not given any good returns, 22% downtick coming for Uflex. You see this trend continuing?
Yes, along with the results also, it is showing the weakness in the charts also, and it has broken the important support of 393 here. So we are also expecting the downside more ahead, and today it was a gap down with the open high candidate. So a complete round top can be found, and it can drag till the previous low of 320. So we would also just advise to exit if anybody is holding here.
That's the take coming in on Uflex, but let's talk about Crompton Greaves consumer electricals, and this particular counter saw a downtick of approximately 6% earlier in the trading session, taking it to the lowest level in over a month, and this on back of its earnings. And you also have Nomura that's actually downgraded the stock. They've actually downgraded the stock to neutral from a buy rating. They have trimmed the revenue estimates for 2023-24 by about 5%, and not just that, they've gone ahead and also trimmed their target to about 338 rupees per share from 352 rupees per share. They're saying they're expecting the investments into the various initiatives to keep the margins lower for the company. Therefore, they've cut the estimates for EBITDA by about EBITDA margin by about 102 basis points. They've also said that they're expecting the 2023-24 revenue at around 7,350 crore rupees, while they're expecting the EBITDA margin at around 11.4%. You also have various other brokerages that have actually reposed faith in Crompton Greaves consumer electricals, but it is this Nomura downgrade that's actually weighing heavy on the stock, and as you can see, 6% downtick coming in for Crompton Greaves.
Absolutely, a couple of downgrades that have actually come in from Crompton Greaves consumer electrical. So keeping an eye out on that one, but that was on the back of the numbers that have come in from the company as well. So on the charts, Crompton Greaves consumer electricals, what's your view? Would you recommend a sell now, or because you're seeing so much of a correction that has come in the last 1 month for the company, would you say that one should look at buying the stock?
no, still we would avoid the stock. And if you see 3 days prior, it has got a rejection from the 200 moving average also. And today it is forming a bearish candle also. Okay, so 280 is the last limit. We can say it is the last support. So below the closing of the 280, it can drag till the levels of 260 also. So we would also just avoid the stock, and if anybody is holding the short position in the F&O, we would just advise to continue with the stop loss of 294 here.
All right, so that's the technical take coming in on that particular counter. Lisa, let's talk about a stock that is among the top gainers on the Nifty today, and that is Infosys.
Right, so it's in focus on the back of a mega deal that it has won with Liberty Global. The deal worth is around 1.5 billion euros order which it has received for building digital platforms, and it is a long cycle order of around 5 years. Well, they will also be licensing these platforms and offer services to new operators as well as markets. And even in the announcement, they mentioned that it's extendable to 8 years, and it will be adding 800 million euros to their deal TCV over the next 3 years. The deal will be starting in Q4 FY24. This will be post-regulatory approvals, and for this they'll be also onboarding 400 employees from Liberty Global. Well, JP Morgan has released a note on the back of this announcement, and they said that they don't expect material contribution in FY24, but it's likely to aid FY25 growth going forward, and it is also likely to be margin dilutive in FY24, but it can add around 70 to 90 bips to FY25 growth, and the annual revenue from this deal should average around $330 million for the company. Well, this comes on the back of IT companies where their commentary suggests that there is a demand slowdown. So this offers a ray of hope for the IT industry. After HCL Tech, even Infosys has received a mega order of this tenor.
Let's move on and talk about Suven Pharma on the charts then. And Sumeet, Suven Pharma in the last couple of months, when you look at it, has remained in that range of, around 480 to 520. As of now, also, it's just at 520. Now, what's the view on Suven Pharma? Should we expect it to see a sharper run-up going forward? Or, what is the expectation here?
Last week it has shown the good result, and after the result it has shown the good breakout almost after 1.5 years. And today, if you will compare, it has given the one of the lifetime high volume today. So we are expecting good movement to continue till the upside of 577 and 610 also. And one can keep a stop loss of 477 here.
All right, that's Suven Pharma for you. But Ankita, moving on, Indiabulls Housing Finance. Why is this in the spotlight today?
Cheryl, Indiabulls Housing Finance is in focus today. It is on the back of Q1 results, and also the fact that there is a note that has come out by Morgan Stanley. Morgan Stanley is maintaining an underweight rating and increased the target price to 103 rupees per share from 90 rupees per share. And this, according to them, the PPOP has been a miss of 21% on lower total income and higher operating costs. Now, the low PPOP was, however, offset by recoveries-led credit cost reversals, and they have raised their forecast by 5 to 6% and the target price by around 14% due to lower COE. Now, they feel that if the company takes the right steps, the ROE is likely to will come back on track, but it is likely to take slightly longer than expected. But on the back of that, Indiabulls is in focus today, and the stock is up almost more than 5.5% in trade.
Okay, that is Indiabulls Housing for y'all. Keeping an eye out on that one. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere, because we'll be continuing with all the stocks that are in focus even after the break.